Here we go again. Today, I want to talk about how the market is doing and what the market is doing. And I think the best way to do so is to show you one of our two pro live streams, what we are doing 2 times in a week. And the first part of the live stream is about to analyze the market. Now, behind the analyzation, there is much more work, you're going to see, but let's start at the beginning and a little explanation. So, in general, the market has 6 main drivers, which is macroeconomics, geopolitics, corporate earnings, market events and news, market sentiment and psychology, and technicals. And those drivers has effect to each of the market sectors, such as ETF per index, commodities, forex, stocks, and crypto. And to measure them, they are always changing the effect and the direction of the effect. So we have a very complex and difficult measurement for doing this. What we usually do is to check out the 6 main drivers at the beginning of the live stream and to see if there is any changes or new anything what actually come up to the market. So first of all, the macroeconomics environment, as you can see, I'm measuring 3 weeks. One of the previous week, one is the current week, and the other one is the next week. And I measure the 4 main market sectors and the effect of the macroeconomic environment to these sectors. For example, the previous week, we got a couple of very, very hard data like CB consumer confidence from the US, new home sales, core durable goods orders, final GDP price index, unemployment claims, and core PCE price index, just from the most important ones. But don't forget, we have a very, very massive macroeconomic analysis every single week. And we also have the conclusions. So when the macroeconomic data is coming out, we are making a conclusion and we are posting this to the website for the pro members and also for the pro Discord server. So the main effect on the market from the macroeconomic area to the ETF, it was negative, while the commodity market experienced some positive effect. The Forex market experienced negative, and also the crypto market. Now, that doesn't mean that the market will move into that direction where the effect shows, because don't forget, we have 6 main drivers. So some of the drivers is actually counterbalancing the effect coming from the macro. And for the next week, which is the current week, there will be a couple of very important data. Now, there is much more, and we obviously doing a lot of more analysis in the macro area. But the most important is on Monday at 4 p.m. This is Central European time, and every single time is in Central European area. So 4 p.m. US ISM manufacturing PMI, then 5 p.m. US Fed chair Powell's peaks, which will be a very early time for 5 p.m. That means that we got lots of time for the market to react to this event. And then on Tuesday, we're going to get US jobs, job openings. Wednesday, ECB President Lagarde speaks. That's going to be at 10:15. And then on the afternoon, ADP non-farm employment change. This is the employment change data, which is coming out all the time, 2 days before the non-farm payroll. And then ISM Services PMI at 4 p.m., still on Wednesday. And then on Thursday, we're going to get Challenger job cuts, which is not basically a very important data, or it doesn't really make a huge effect on the market. But this time it will, I think. So we need to check that out. And then unemployment claims, which is a weekly data, obviously. And then Friday at 2:30 p.m., non-farm payroll, which is the bloodbath of the macroeconomic. So we need to take a huge, huge attention to this. So in my analysis and as of my prediction, I think that the ETF market will receive some negative effect, while the commodity market will receive some positive effect. The Forex and the crypto market could expect some negative effect from the macroeconomic area. And then next week, I mean the week after, there will be a very interesting week. Not too much US data, but there will be a lot of data from the European Union and from China as well, probably. So, which is not here, but we will posting in the website about that for the pro members. So, first of all, Monday is a US bank holiday, and we can expect a very, very slow market, that means that it's not really worth to making any kind of trading because it is really slow. And then Tuesday is very quiet, but then the market will be open. I mean, the US market. On Wednesday, we're going to get US core PPI and PPI data at 2:30 p.m. Central European time, and then Fed meeting at 8 o'clock. And then Thursday is core CPI and CPI data from the US at 2:30 p.m. And Friday is prelim consumer sentiment. And don't forget there will be an inflation expectation as well, which is very important. So a lot of data, and we're not going to get bored unless we get bored on Monday. But don't rush too much. We still have the current week ahead of us. And I assume that will be a negative impact overall. But we have 5 more drivers. And one of the drivers is the geopolitics. And as you can see, there is 6 main area in the geopolitics what we need to keep an eye on because they have serious effect on the markets. So the first one is the relation between the US and Russia, and then the relation between US and China, between EU and China, the Ukraine situation its own, and the Taiwan situation as well. And then the new relationship, which is the US-Japan relationship, because Japan is considering to start raising rates, which is obviously a monetary policy change. And if they go with the quantitative tightening, this will be a very large impact on the bond market and the Forex market as well. But as you can see overall, the crypto market is receiving a mild positive effect or neutral from most of the area, while the commodity market is pretty much positive. I mean, in terms of the geopolitics, but not everything else. And then the Forex market is fairly mixed. There are 2 areas with neutral effect, 2 areas with negative effect. This is the US, China, and the Ukraine. And then we have the EU, China, and the US, Japan so far positive for the Forex market. And then the ETF index and stock market is receiving a largely negative impact from the geopolitical field. So this is mainly negative, and that situation does not really change rapidly. But because of the US-Japan situation, we need to monitoring every single week. And then the third main driver is the corporate earnings. Now, as you can see, I have actually 8 main market sector what I am watching with the earnings in terms of the earnings, which is both I'm watching the Q1 and the Q2, and of course we are waiting for the Q3 and Q4 earnings reports. But so far, as you can see, the finance was pretty much negative in the Q1, and then the Q2 turned into very negative, while the health sector was mild negative in Q1, and it turned into positive in Q2. Now, this is not very positive, don't get me wrong, but it's way better than it was in Q1. But the tech sector is actually worsening, and then also we got the consumer services and the car industry. Also, the transport sector is making a little bit worse results on the Q2. So far, as we know, the retail still can be positive. The health sector is improving a little bit, and the energy sector is also improving a lot, actually, but there is no surprise. So what we can take that as a conclusion that the market is finally started to react to the real performance of the market, and therefore we can expect further negative impact from the earnings side. And then the fourth main driver is one of the main driver, which is the market events and news, obviously because the news are directing the narratives, and the retail traders are reacting to the narratives. Not very wise thing, but that's what it is. And as you can see, of these news are coming from our websites. We are monitoring the whole market, and we are making very, very complex news. And this is not like stolen from another news channel, but we are really writing. We have news writers, and they are very experienced in terms of economy. So as you can see, the ETF index and stock market is experiencing a negative impact from the news narratives. Now we do that both Hungarian and English as well. But for example, my Hungarian videos was talk a lot about the previous Nvidia earnings and the little cheating what they did. And also 2 weeks ago, I was announced that the big fish is finally in the market, which is very negative. But also changes are ahead. And for example, Morgan Stanley says investors are overreacting to news of Chinese iPhone ban. But again, that was a very, very negative narrative because obviously people was reading this news and then we experienced the negative impact. People just don't really believe that the Apple company can lie anymore about these problems. So it's a negative overall picture from the news side, which is dangerous because of again. This is the narrative which followed by the retail traders, and it has a huge impact on the market. The commodity market is mainly green, in the green, so it's a little bit positive. The energy market is very positive, especially after BlackRock was announced that they don't think that the renewable energy sector could improve in the next couple of years because it's just simply too expensive, and I actually agree with that. Meanwhile, I also support the change, but the change cannot be as quick as people expecting that. And the loads of positive news from the commodity markets, also negative as well. But the main reason why I just put that here, the positive news, because the energy market is really surging right now, and we are closely following the situation. So it's mainly positive, but also positive from the UK, from the Ukraine situation, because the grain deliveries somewhat improved in the last couple of weeks, which is very, very good. But this is actually negative for the prices. We're gonna talk that a little bit more in the pro server. The forex market is experiencing a somewhat negative narratives. Also the Hungarian side, the US side, the Japanese, the UK. So I have a lot of alerts to my Discord servers. For example, the Japanese, I just posted 2 days ago that the Japanese 30-year bond yield is on the highest level since 2013, while the Japanese yen keep collapsing. And it is almost certain that the Bank of Japan will intervene and raise interest rates from the end of the year, and depending on the inflation level, maybe even sooner. And we have two scenarios, possible scenarios, how the BOG would do that quantitative tightening period, and it has a huge, or it could have a huge impact on the bond market. So it's mainly negative, and the bond market is start to show some sign of lives. While the crypto market is a little bit turning to positive now, in the last couple of weeks, we experienced a very low amount of news from the crypto sector, and it was very mixed, mainly neutral to negative. But in the last week, it was turning to positive. So that means that the market news and events driver has a positive effect on the crypto market. But don't get me wrong, as long as the crypto market doesn't get any trader volume, there is not much thing going to happen there. And the trader volume is actually suppressed by the financial sector of the macroeconomic area. So it's a very chain reaction. We need to improve the financial sector, and then the trading activity can improve actually on the crypto market. But now it's turning to a little bit positive. So this is about the news. The other market driver, which is very, very important, and it's actually built up by the reaction of the technicals, the reaction of the macroeconomic field, the reaction of the market news, and these main three driver gives the overall picture of the market sentiment and psychology, so the mood of the market. And this is a very detailed scale. As you can see on the ETF index and stock market, we can see that the finance sector is experiencing a very, very negative sentiment, while the health sector is mainly positive, but not much positive. The tech sector and the retail sector is almost the same, very negative. The consumer services are somewhat negative. The car industry is somewhat negative. Also, the transportation and the energy sector is getting very positive nowadays. So this is not too bad for those sectors like the energy and the health sector. But the commodity also, it's very detailed because as you can see, the essential food sector is mainly negative thanks to the Ukraine-Russian relationship. The non-essential foods, however, turning to slightly little bit positive, and this is a very bullish market, by the way, in some way, and that's a good news for them. The energy market is somewhat neutral, and the neutrality comes from the consolidation of the oil chart in the last 1.5 weeks. If someone is watching the oil chart, you can see that clearly, but also you can find the live chart on the Pro server. And the precious metals are mainly negative, but this negativity came mainly from the Friday trading day, which was devastating. And then the industrial metals are somewhat a little bit positive, lead by the copper, and the livestock is also on the positive side. So as you can see, this is overall slightly neutral to a little bit positive, not too much, but the commodity sector is doing pretty well in this economic environment. While the Forex market is interesting because the DXY is still positive, but I talked about a lot. We are really one of the correction is really overdue. So we're expecting some breaking point in terms of the DXY chart, but the EXY is very negative correlated to the DXY. The JXY, which is the Japanese yen index, is very negative, but also, as you know, this is a big danger for Japan. The BXY is one of the most negative index on the Forex market, while the QE, the ZXY, is just a little bit negative. This is actually consolidating. And we got the CXY, which got a very, very bad day on Friday. And therefore, at the moment, this is the most negative currency index on the Forex market. The SXXY, which is the Swiss franc index, is pretty much negative and is actually just getting accelerating to the downside, while the AXY is somewhat negative, but it's still consolidating, but it shows some negative picture, some negative sentiment. Now you need to know when we are talking about market sentiment on the Forex market, then we are talking about the bank sentiment. And this is a very, very important point when you analyze the market itself. Meanwhile, we got the crypto, which is just turned to a little bit positive, as you experienced the last couple of days were was really, really good, but very weak at the same time. The crypto market in general is in a negative territory. You need to know that. And we are consolidating for a very, very long time. But at the same time, the last couple of days was pretty much positive, but it's still unusable because of the very low volume on the market. So this is the market's sentiment and psychology. Because we get this detail, we get this result, sorry, after we analyze the whole market and we get all the news and everything, and my team and me together, we are doing this and then get the results of the market sentiment, same as every single driver. And lastly, the technicals. Now, the technicals are very interesting because we are focusing only to the technical chart and the technical reaction on the market. For example, if we take a look on the stock market balance, as you can see, on to be exact, 21st of August, on Monday, I told to my pro members that actually the stock market is the most overvalued market in decades. And then we got the results. It's already building to the downside now, which is not very clear. I don't think that, or I cannot confirm that this is the beginning of a market crash. There is a good chance for it, by the way, but I cannot confirm because there is also a chance for an ABC correction, as you can see, and then we can just start shoot out to the stars. But the thing is that I don't think is going to happen, because in order to shoot up to the stars, we need the same market environment what we experienced in the last couple of months, which was positive, that's true, but it was positive only because from that point, only the retail was driving the market. The big fish was getting out of the market, and now they are in again. And since more than a year, the big fish is continuously only negative, obviously because companies are performing very badly, and you can see that clearly from the earnings. But if you go back to the earnings, then you can see clearly that yes, this is actually the case. The companies are just started to reporting more negative and negative earnings, especially about the revenues. Revenues are terrible quarter by quarter. And so this is a very negatively balanced market. And obviously, we are going to get some corrections to the upside, but I think the buy the dip is not the best solution for now, especially for those who thinking about long term. I think this market is going to move to the downside for long term. At least this is what we are seeing from the picture right now. Now, in terms of the options market balance, as you can see, the VIX is getting higher and higher, but this is a very cheating information because unfortunately we don't see the 0-day contract, only the 30-day contracts power, but it's still going to the upside. So the market is going to more and more negative territory. You can see on the SPY put contracts, they are keeping themselves on the highest area, while the car contracts is not on the market. They are not directing the market at all, while the SXY coal contracts are somewhat positive now, but because of the big fish is already again on the market, I think you can expect that they start to push up the prices a little bit for a couple of days, and then when everybody is buying the dip and the retail got crazy because this is the new bull trend, then they're gonna short everything down. So be very careful with when the the SPX is showing positive core contracts, so directing the market. Now, this is the ETF stocks and indexes, but the Forex market, as you can see, as I talked about, the DXY is pretty much showing some sign of exponential movement to the upside, which would be a good sign because we are really waiting for a correction now. This is one of the longest single structure to the upside for a very long time, and I really want to see that the price is declining a little bit. If that happens, probably the stock market could, breathe up a little bit, but also the EXY could make some kind of correction movement to the upside, which would be perfect to retest the broken trend line and the level 108.45. But as long as the DXY is trying to break this level, I don't think it's going to happen. So we need a structure breaking. This means that the support of this channel to the upside, which is not visible right now here, but if you want to see the live chart, you need to go to the Pro server, sign up for the Pro membership first of all on the website, and then on the Pro server you can find all of the indexes live chart and many more stock live chart and commodities indexes, so much more. So seriously, we have I think about 80 live charts altogether, and it's just coming more and more. So back to the charts, the Japanese yen, as you can see, this is very negative, and I think that BOG got stroke at this level when we broke 69.01, and because they probably expected some double bottom bounce back, but that did not happen. In fact, we're just going towards to 65.93, and I see currently a high chance of interest rate hike at the end of the year because they need to stop this bleeding immediately. But unfortunately, the British pound, as expected by the way, started to move to the downside and on an exponential way. So that means accelerating to the downside, which makes a perfect currency pair with the DXY, by the way. So British are not happy, but also we need to watch closely the Bank of England, because if it gets too cheap, then probably they will start intervene as well. Now they see the example from Japan, so they can react a little bit earlier than the Japanese. But as you can see, I said that the QE, the New Zealand dollar index, is actually consolidating. You can see that clearly. Probably this is going to be a bearish flag, but it's not confirmed just yet. And there is some more movement possibility to the upside. So this is not too bad, but I think it's still very risky. While the Canadian dollar got a huge hit on Friday. As you can see, that candle is not a game. So we need to focusing on, if this thing is going to be negative, then it probably makes a very good pair. Because when you choose a currency pair to trade, you need to choose the most strongest one to the downside, and also the strongest one to the upside as well. And therefore, you can get the perfect pair, and you can start trading on. So this is why if something is very negative, we are very excited, because that means that we're going to get some opportunities. But also the Swiss franc currency index, which is the SXY, is started to accelerate to the downside, is stepping out of the channel, unfortunately, and weakening even more and more. As you can see, the scale EMAs, these three exponential moving averages, they're holding the price very nicely. Also, we got the retest on the lower trend line of the channel, so I expect further negative movement in the upcoming weeks. And the Australian dollar is still consolidating, very similarly to the New Zealand dollar. But at the same time, this is a very risky market, because when you're a trader, you need one thing, a trend direction. It doesn't really matter which direction it is, but you need a stable direction. But when an asset is consolidating, it's always the largest danger for a trader. And this is why we don't choose the AXY for trading for a long time now. We're waiting to step in out of this consolidation, either to the upside or to the downside, and we can start calculating with it. So the technical picture of the Forex charts indexes are pretty much negative, but because the correction is overdue on the DXY, we can expect some kind of correction to the others, to the upside as well. This will be very interesting to see. While the crypto market, as you can see, in terms of the crypto balance, this is why I told you that it's still negative, because as long as we are underneath the white line, that this is a scaling line on the Bollinger Bands, we are indeed in negative territory. But as you can see, the crypto market is actually at a decision point. It's not only because we got that support zone here, which is not visible on that chart, but because if we are breaking this level and start to move to the upside, we can expect a couple of positive weeks on the crypto market. But again, be aware that the volume is very low, and all you need for a crypto market rising is trading volume, nothing else. You don't need investors, you need traders. And as long as you don't get this, you're not going to see a bouncing crypto market, maybe a sleepy moving crypto market to the upside. But let's see how the market itself is deciding. But I have some more details a little bit later for you about that. But in terms of the total market cap technical chart, as you can see, we're finally above the 50 exponential moving average on the daily chart. And that gives the opportunity to visiting the 200 exponential moving average and the zone itself. But don't forget, we can rise over there, but it's still just a retest after the death cross on the daily. And most usually, the charts are behaving to the negative side after retesting the death cross. However, this is the second touch on the 50 EMA since the death cross, so there are chances. But in order to say that the crypto market is a little bit positive, we need to break that zone. So we need to go above the level 1.07077 to be exact. So this is the way. But the MACD, the good news is that the MACD is almost above zero, just about to crossing. I hope that is going to happen so we can get a further positive chart. But in the meantime, the RSI is starting to get to the upside. And if it's strengthening in the upcoming days, even a correction is expected on the chart. So be aware of that. So this is the technical perspective and the technical driver of the market. And now let's see how the market sectors, each of the market sectors are reacting to this environment. So for example, we have a beautiful chart, by the way. As you can see, here is the 6 main drivers, and we measuring that for how much of the volume on the, for example, this is the ETF index market, is responsible the macroeconomic area. So in this example, the macroeconomic area is responsible for 17% of the volume and the movement direction of the market on the index ETF market. And so far we got a -9 point, which is improved from the previous meeting, which was on Thursday, by the way. It's a little bit improvement, but it's still negative. So the macroeconomic area or environment is pressing the ETF index market on a negative way. Not fully pressing, it's only 9% out of the 17, but it's still a very negative picture. While the geopolitical area is it has a maximum of 7% of the driving, the market driving, and it got minus 4% out of it. So it's still not the full, but it's also negative. The corporate earnings, they are dangerous because they have 15% responsibility of driving the market, and it is on minus 13% right now. So almost fully used its full power. We only got 2% more to get, and this is a very negative pressure on the market. While the market news and events, which is the narratives from CNBC and things like that, is on minus 12%. The maximum is minus 17%, and it still keep declining and it gets stronger. This means that the negative narratives from the media is getting stronger and stronger effect out of the traders and investors. So we need to keep an eye on that. This is a very stable negative effect, by the way. The market sentiment and psychology is somewhat declining compared to the excuse me, previous data, which was minus 8%, and now the new data is minus 10%. The maximum is actually pretty huge. It's 22% altogether, but we use only 10% out of it. So huge surprises ahead of us still because we don't use the most power. While the technical charts are showing 12% of usage out of the maximum of 22%. This is pretty nice. This is declining from the previously measured 10% in minus. That means that the overall effect, as you can see, is technically a minus 60 point, which means that we are very bearish, but we still get 40 points to go. So this is not the most negative market ever, but it's already very, very negative. And as you can see, this could keep a very stable trend to the downside, actually. Now, the previous point was minus 55. It was improving compared to the previous one, but now we're declining back. That the improvement happened at this meeting on 28th on Thursday, because most of the ETX and index chart found some kind of support, and the market was a little bit catching the break because they don't want it to over accelerate the market to the downside, and that was very visible. And I think the big fish was about to testing the buy the dip retail traders, but they turned out not too positive and not too strong. So we continued to go to the downside, and this is why we got that 60 point altogether. But as you can see, this is a very, very complex point, because it's not just about looking at a chart and say, oh, this is negative or positive. But as you can see, we're measuring every single market drivers, and then we got an overall point. So overall, we can say that the main direction on the ETF market is bearish. The direction is actually, the direction status is stable. The strength of the market is coming from the macroeconomic area, the geopolitics area, earnings, news, and technicals. And the surprise possibility can come from macro, sentiment, and technicals. And that's because we did not use in those drivers the full power. So, for example, we got much more power left to use in case if we get a very negative macro data. And this will be a very interesting to see if it folds out. But it's still a very negative market. Risky sector is the HK50, but not only that, the whole Chinese related ETF and indexes, and the Budapest index as well, because it's very positive. But I experience signals that we are closing to the top, and maybe there is a turnaround, or at least a correction to the downside. We got some risk. The main risk on the ETF and index market is mainly technicals, and that's because there is a high chance for correction to the upside, and this is very dangerous for the short positions. So be aware that you're closing your positions when we are changing structures on the charts, especially on the low time frames, and get out in time, cash the money in, and when the chart continues to go to the downside, you can hop in back. But it's better not to play the buy the dip, believe me. Not this time, or at least this is too early to do so. But if we take a look on the commodity market, as you can see, the macroeconomic effect on the market could be 25% responsible for the whole market movement. and it is at positive 17 point, very stable positive 17 point in the last 4 meetings. There is no changes. So this is a pretty strong effect on the market. While the geopolitical effect on the market could be also 25%, a huge number. And we got an accelerated power from the geopolitical field that's on 16 point now. That was 13 on Thursday, 11 on Monday, and 11 last week. So it's strengthening the effect on the market. So the answers for the geopolitical happenings are stronger and stronger. Basically, corporate earnings has no effect on the commodity market, but the market events and news could be maximum of 8% power, and we got only 3 points. So this is very weak. It's still a positive, but very weak power. While the market sentiment and psychology is turning over, and actually since in the last 3 meetings, including today's ones, we got minus points after positive one. That was -3 first time, and then -4, and again -4. That means that the market is reacting in some cases, in some market sectors within the commodity market, on a negative way. So we need to be aware that probably we found some resistances, and there is no promise or guarantee that we can break the resistances, because every single commodity, or not every single, sorry, that was a mistake to say, but most of the commodities are very expensive right now. So we might facing for some corrections to the downside. And this is exactly the same what the technical picture shows from the commodity market. As you can see, the last 3 meetings turned into negative. After 3 points minus, we got the -6, and then we got -12 now. So we literally get rejected by some of the resistances. So be very careful on the commodity market. In fact, the overall point is still negative, but it's keep declining. So it shows something slow down. I wouldn't say this is a turnaround and turning to bearish trend whenever we got the bullish one, especially excuse me, especially on essential foods. But some of the correction may be expected because the point is just declining. It's now down to 18 points. It's still a positive market, but it's declining, so we need to be careful. And the main direction is, as you know, this is very mixed, because within the commodity markets, we got several different sectors, and those sectors are actually reacting completely differently. One is in bearish market, the other one is in bullish market. But overall, we got a mainly bullish market on the commodity market, but the direction status is getting unstable for what I just said in a couple of minutes ago. So the sensitivity of the market is coming from the macroeconomic area and the geopolitical side, but the surprise can come from sentiment and technicals, because they have huge power, but it's not used fully just yet. So I think we can get some surprise movement as a reaction for these segments. Technically, I consider every single commodity sector as very risky sectors, and that's because of the possible turnarounds or corrections. But this could change very quickly, especially if the stock market continues to go down, because obviously safe havens supposed to start moving to the upside a little bit. And the main risk on the commodity market is technicals, and the possibility of the corrections, as I mentioned. And unfortunately, the Ukraine situation is still giving a very negative signal, despite its improvement, but it's still giving very negative signals. So it's suppressing the essential foods, like, for example, the grain-related foods coming from the Ukraine. They are somewhat improving now because the situation improved, but it's in a bearish trend, almost all of them. So I don't think that I'm going to look for opportunities on the commodity market in the upcoming week. The Forex market is interesting because the macroeconomic area has 25% power in that, and we got -12 point. The point is improving in the last 3 meetings, but it's getting stable at -12. So this is a negative effect. Now, you need to know that this negative effect is not negative to the DXY. This is negative to everything else, which is not DXY, but we are following it. And that's what I mentioned, AXY, EXY, JXY, BXY, ZXY, so CXY. But the macroeconomic area is obviously very negative for those currencies right now. The geopolitical effect could be 25%, but it's using only 3% of its power, and that is very, very negative. I mean, not negative, but weak. But we need to be careful, because if that thing is exploding to the upside, there is a much opportunity power could get from the geopolitical side towards the forex market. While the corporate earnings has no effects on this market sector, but the market news and events is actually has a very low amount of power over the forex market. It's only 8%, and we're using only -3 after 2 -6 points. So somewhat improving, but it's still very negative, and that's not a good news. The market sentiment and psychology is actually has maximum 17% power above the forex market, and it's using almost full power. It's at -14 points right now, and this is the bank sentiment. So this is something signal that the banks are still considering longer term bearish trend for the currencies and not shorter terms. Of course, the point could turn around and go to positive, but I don't see any signal for that so far. And the technical chart is also very dangerous because it has 25% power over the forex market, and it's using 17 in a negative territory. So we still could decline a little bit more with this point, but overall, this is a very negative pressure for the forex market. And overall, every single driver, main driver, is giving us an overall point, which is -43, just a little bit improvement compared to the last meeting on Thursday. So probably we're not going to open the market very sadly on Monday, but don't forget, this is a negative point, and every single minute when the DXY makes the move to the upside, it could just even worse to other currencies. So we need to be very careful. The main trend on the forex market is bearish. The direction is relatively stable. The sensitivity, which is the strength of the market sector, is coming from the sentiment and the technicals. Both of them are very, very weak, as we were strong to the downside and the negative power, as I mentioned. And the surprise possibility is the macroeconomic area, because it doesn't use the power. The geopolitical field, which also does not use almost anything from its power, and the news, which only have 8% of the power, but it's still an opportunity for more negativity. The most risky sectors, or not really sectors, but assets, are the DXY because of the possible correction, the ZXY because it's consolidating, and the AXY also because it's consolidating, and that's a very bad news for us. And the main risk on the forex market is the possible DXY correction. It's a risk because if somebody's stuck into buy positions and the DXY starts making some corrections to the downside, they can just lose their positions very quickly if they're not careful enough and not closing the position in time. So if we go further, the stock market is very similar to the ETF index market, but it's not the same. The macroeconomic environment has 17% of the power, and it's using -7%. So it's a little bit declining compared to the previous two -6 points. So we got worsening, more stronger negative power from this field. But the geopolitics are very stable. The effect. It's on -6 points stably. So it looks like those two power keeps the bearish trend on a very, very stable way. While the corporate earnings, is at -15%. Now they have 20% of the maximum power. So we did not use all of them, but it's still, it's as you can see, it's worsening. And that's because the big fish is on the market, and the big fish has actually realized that if I step in, I have to judge the companies by their performance, and those performance are just keep worsening from quarter to quarter. And this is why you experience this negative effect on the market. The market news and events has 10% power over the market, and it used -8 out of this 10, so pretty strong. but we still got something to use. But this is actually stabilizing the bearish sentiment on the market, which sentiment is not fully used because it has 25%. This is the highest percentage right now. And if I need to balance, then I will change this number. But right now, this is the accurate power coming from this sector, and actually we're receiving -7% after -4. This is a little bit worsening, but this is a relatively stable -7% average what we are using, which is dangerous because that means we did not see the worst part just yet. So it's still ahead of us because we did not use that power, and that's a big thing. Technicals are responsible for 20% of the movement on the market, which is worsening compared to the previous meeting. That was -4 previously and then -6 now. So maybe we start to see some kind of negative pressure from the technical traders as well, and from the technical traders on the Wall Street especially. So big things, and the overall point after calculating all the 6 drivers is actually pretty weak, -49 point. And we got some decline compared to the previous point that was -43, excuse me. And that means that actually the market is stabilized on a bearish trend, but it's not worsening just yet. We can expect some, but we need to wait for that effect because probably we are at the support. So as you can see, the main direction is bearish. The direction status is stable. The sensitivity, so the power of the market is coming from geopolitical, from the earnings and from news. And the surprise possibility is the macro. As you see, we did not use the power. The sentiment, because we did not use the power. And also the technicals are very dangerous. And all 3 started to decline in the last meeting, in today's meeting. So it's a pretty dangerous signal. Now, the risky sector is the essentials like energy sectors and health services. And I know I mentioned that actually they are the ones who probably will increase a little bit in the environment like this. And this is true, and we experience that. So this is actually happening. But when the whole market, the stock market, is going down, except just 1 or 2 sectors or 1 or 2 stocks within 1 or 2 sectors, and this is mainly the essentials, this is always the dangerous side of the trading. So I always saying that if the rest of the market is negative, you're supposed to look for your opportunities to the negative side and not searching for, the smallest sector, which is going to the upside, because the negativity might be, spiraling out of these sectors in some days, and this could surprise your buy positions as well. So I don't think this is a very good idea. So yeah, this is the overall conclusion from the stock market. And the crypto market is actually a very, very interesting one. So the macroeconomic effect is 20% on the market, but we know that there is a very low trading volume environment right now in the crypto market. So it's still weak. And on the other hand, this is not the full macro picture what we are following, because the crypto market is usually reacting only for the financial sector of the macroeconomic area. And so anything about money supply, anything about GDP, CPI, or even rate hikes, the probability is higher that the market will react or would react if there would be enough trader to do so. But there is none at the moment. But generally, the power, so the effect from this field is -16 very stably, which is very negative and almost using all the power, not all of them, but almost. While the geopolitical field has unfortunately only 5% of the power yet, but it's using only 2%, but it does on a very stable way. Corporate earnings has not really showing any effective reaction on the crypto market, so I don't really measuring. But the market news and events are one of the strongest one. It's 17% right now, but it's usually like 22, 23 or 25%. Now it went down because I mentioned that the amount of news in the crypto market is just declining week by week. As you can see, the power is just turned around to very positive, a little bit positive side. I mentioned that previously. and now we are at actually positive 1 point. That doesn't mean really anything. It's not going to drive the market, so we don't have to worry about that. But the potential is there. It's very, very there. And as you can see, the market sentiment and psychology is a very low point. It's on positive 2 point right now. But previously that was -2 and -2 in the last two meetings. I mean, yeah, this is a power, but this is also again signaling that there is no really trading activity over there. And this is why, because it's a long-term consolidation at the moment, I think it's a very risky market sector. But everybody decides about that, which is also dangerous, because if it's sleeping away, then we still got the power opportunity. And if we're going to get some financial macro improvement over the weeks or maybe over the months, there will be some kind of opportunity that the mood on the market is improving a little bit. And the technical picture is showing exactly the same, because we were a little bit positive on 18th of September and 25th of September. But then in the last meeting, we turned into negative, and then we keep the point, which is a -2 point, not too much on the negative side. And that's only because we still did not break this median line, what I just showed you. So the risk that we continue to go to the downside is pretty high, because I'm going to show you. So the main direction on the crypto market is still bearish, and the direction status is unstable because we are long-term consolidating. So it could be a trend change, or could be a continued movement to the downside. The market will decide, but we need to wait until it's deciding, because so far no power in it. The strange, which cannot be mentioned really as a strange, but it's coming from the macro, the geopolitical field, which is controversial. As you can see, one of them is positive, but with less percentage effect, and the other one is negative with more percentage effect. This is why we are still in negative territory on the crypto market. And the surprise possibility can come from the news side, the sentiment, and the technicals. But again, in order to get them explode and start making big news and start making mood on the market, and the technicals start reacting to the movement, it has to come with the money. Now, you need to know that the crypto market is dead without the fiat currency at the moment, because you need fiat currency to get some kind of value to the crypto market. And we know that the crypto market is about to change now. Crypto brokers are trying to comply with the new regulations. And as long as this situation holds on, I don't see why we would see why we would experience a huge improvement on the crypto market. So it takes a little time, but we're going to get there. That's okay. But because that's a long-term consolidation, I state the whole crypto market as very, very risky sector. And the main risk on the market is the possibility that the market will somewhat correlate with the stock market negativity, and then it could turn down as well. So this is how we're measuring the market and the current status of the market. Now, every single data what I just mentioned is coming from very deep and serious analyses, and this is how we get these points. And our viewpoint is that we need to identify the possible way of money flowing on the market, and then we can follow it. So the next part of the pro live stream is that I usually start with the charts. We start analyzing and figuring out, where is the money, and we try to make some. So if you want to join to us and see these live streams as well, which is 2 times a week, then you can just go to the website, sign up for the pro membership, and you can join us on the Discord server. But this is not the only one thing what we do, because by the way, we have a very serious education system. We have challenges like performance challenges. We have very deep and every single day macroeconomic analysis, news, so whatever you want. So if you are really market lover, I'm waiting for you on the pro server. And if you don't like it, then I'm going to see you in the next video. Thanks for watching. If you liked it, give us a thumbs up. And also, it would be very appreciated if you share this video if you found that usable. So see you in the next video. Bye.